The purpose of this presentation is to give you an overview of the differences between Bitcoin and stock investing. As with any investment, you always want to take into account and give strong consideration to what the risks are. You never want to invest in anything without knowing what the risk factors are. So let's jump right into this. Oh, and also I just want to say this as a side note, that the risk factors help you to determine what your risk tolerance is. And based on what your risk tolerance is, helps you to determine if that particular investment at that particular point in time is the right investment for you. All right, so let's jump right into this. Bitcoin. Cryptocurrencies is speculative and solely based on supply and demand. Unlike the dollar or gold, cryptocurrencies like Bitcoin are a significantly smaller market with respect to its overall size. This makes cryptos more susceptible to significant shifts. Your digital wallet can be hacked with no path of recourse. Bitcoin lacks the predictors that stocks have. Now, for those of you who are also interested in cryptocurrencies, I just want to share this as a side note as well, that in order for any coin or crypto to be successful, you want to ensure that it has a volume or selling and buying transactions of 1 million people or more involved. If it doesn't have that, then that particular coin is going to be unsuccessful. Now let's move into stocks. An individual stock may not grow. Dividends might get cut. Its performance will be compared to the S&P 500, which is an index fund. And for those of you, as most of my audience is that are new, if you are not familiar with the S&P 500, the S&P 500 is a stock market index that measures the stock performance of 500 of the large companies listed on the stock exchange in the US. So what this means is that any particular individual stock that you invest in, its performance will be compared to the S&P 500. And you can also invest in the S&P 500. Now, that's for another presentation, getting into the understanding and the mechanics of the S&P 500. It is outside of the scope of this presentation, but I wanted to give my viewers here an opportunity, to have some insight on what the S&P 500 is. So now there are also more risks with individual stock unless you own 20 or more stocks. This also requires more time. If you want to have 20 or more, individual stocks, and then you have to build your portfolio that way, then it requires more time to monitor your portfolio, as you need to ensure that the companies you invested in are not having business problems that could wipe out your investment. You must master your emotions. And that is really the key in being a successful stock investor or even a trader, because I know some of my audience are also new to the world of trading. And mastering your emotions is what will determine if you are successful or not. If you have a good trainer, a good teacher with a solid strategy, that strategy will not serve you if you are unable to master your emotions. And I want to go back to Bitcoin just for a moment to highlight here where we talk about your digital wallet can be hijacked. Bitcoin, as it stands now, there's simply no path of recourse. So if your wallet is hijacked, then there's nothing that you can do at this point in time to regain your investment. Unlike stocks, where if you invest, say, with a particular broker and then your account is hacked. Well, your money is insured, and then the broker has the responsibility to refund your account. So you do have a path of recourse there. Key takeaway here: Bitcoin is still a new development and not yet widely accepted. This adds a different level of risk because it could be replaced by another digital currency that is more efficient, or it could be regulated out of business. Something to think about. So now let's look at the history between the two. Bitcoin has extreme price fluctuations. In 2015, Bitcoin was priced right around between $200 and $500 per coin. In December of 2017, it reached a high of $19,891. In December of 2018, those prices fell below $3,500. On March 12, 2020, it was right around averaging at $3,858. On July 5th, 2020, $9,074. So you see how extreme the price fluctuations can be investing in Bitcoin. Stocks. Stock growth is less dramatic and more stable than Bitcoin since early 2015. And we're doing a comparison between the stock market, investing in the stock market, in comparison to Bitcoin from the year 2015. In early 2015, the S&P 500 maintained a steady average of $2,000. Despite normal fluctuations, as of July 2020, the S&P is averaging around $3,100. The Dow Jones Industrial Average has fluctuated between $17,000 and $18,000. In December of 2017, Bitcoin peaked at $19,891, while the Dow Jones was about $24,000. As of July 2020, the Dow Jones is about $25,000. So, as you see here, that in the difference between the two is the extreme price fluctuations of Bitcoin. Bitcoin is highly unstable in comparison to the stock market, which is far more stable than what Bitcoin is. Now, that's not to say that the stock market does not have its share of swings or fluctuations. However, those swings are nowhere as near as extreme as Bitcoin. So if you are going to invest in Bitcoin, you have to be extremely intelligent and wise on how you're going to invest and what your strategy is and when you are going to exit the marketplace. Key takeaway. Historically, the stock market yields approximately 10% annual returns. Inflation adjusts this percentile to between 6 and 7%. Bitcoin's historical data fails to compare. So we have enough history with the stock market to know that what its average return is going to be. So if you make an investment into the stock market, you're pretty, I won't say that you're 100% guaranteed, but you have a base to know that historically speaking, and his historical performances are not a guarantee of future performances. However, there are several support mechanisms that will ensure that if you invest in stocks over a period of time, you will make a profit. You will be okay. And those average returns are going to return you a minimum on average between 6 and 7%. Who is best for Bitcoin investing? Those who are looking to diversify their portfolio away from the dollar. Those who have high risk tolerance. Those who are willing to limit their portfolio to a maximum of 5% of Bitcoin investments. Now let's talk about this here briefly. Those who are looking to diversify their portfolio away from the dollar. Now, those of you who have studied a little bit about the US dollar, or what is known as fiat currency, then this is why those who are interested in investing in Bitcoin are interested in investing in Bitcoin, because they understand what a fiat currency is and the dangers that come behind fiat currencies. Historically speaking, every fiat currency ultimately has failed. It has been replaced by another fiat currency, so forth and so on. However, historically speaking, all fiat currencies go back to zero. The US dollar used to be backed by silver and gold. Silver and gold, meaning that the dollar, when you look on your $1 bill, you will see that it says now it is a Federal Reserve note. A note is a debt. However, prior to it being taken off of the gold standard, and that's another presentation, but you can do your own research on that to get more information about when the dollar was taken off of the gold standard, who did it, etc., and why. However, once it was taken off of the gold standard, it was no longer backed by silver or gold. Now, when it was backed by silver and gold, it was called a certificate. So if you had a $1 bill, and I'm using a dollar bill as an example, whether it was a $5 bill, $10 bill, or $100 bill, doesn't matter. It was called a certificate. And right on today's dollar, where you see Federal Reserve note, under it, when it was backed by silver and gold, it would say silver or gold certificate. And you could take that value to the bank and cash it in for its equivalent of silver and gold. You can't do that today. And this is what makes Bitcoin attractive, is that if you want to diversify out and you want to shield or hedge against the fiat currency, or the collapse of a fiat currency, then Bitcoin is very attractive. Now, if you are a person that has a high risk tolerance, meaning you can afford to invest in Bitcoin, and if you take a significant loss of your investment or lose all of it, you're okay with it. It's not going to change your life. Your rent will still get paid, or your mortgage will still get paid. Life will continue on for you. Well, if that's you, and you have the money, quote unquote, to lose, that you can afford to lose it, then Bitcoin is for you. The 5% maximum is the recommendation that investment professionals has set a standard to, of 5% investment into Bitcoin. And this way, into your portfolio, and this way, all of your money is not at risk. Who is best for stocks? Those who want a more stable investment. Those who have a low risk tolerance. Those who can invest for the long term. Bitcoin, as it is right now, in my judgment, is not a long-term play. Bitcoin is for the extremely sophisticated who understand Bitcoin and when to get in and when to leave. So it's a fast investment. It's for the fast investor who is savvy in cryptocurrencies. For stocks, for the investor who is new and you want something stable that you know it's going to be safe, you can invest in it and it will yield you a return over a long period of time. So if you are starting out and say you are 19, 20 years old and you start investing, and in 20 years from now, your account will have grown. It is a long-term play. However, you're going to live until you die. And until you die, you're going to live. So unless you plan on dying before 20 years, then you can invest every month. You can invest into your investment, whatever you have been advised by your financial advisor that has given you advice. Then you can begin investing in that in trust, with the trust of knowing that at the end of this 20-year term or 30-year term, however it's going to be, you are going to have a significant amount of money waiting for you at that future point in time. But you have to have a long-term perspective thinking. You can't have short-term perspective thinking when it comes to investing in stocks. And I'm not talking about day trading. I'm just speaking in reference to, let's say you decided that after you have spoken with your financial advisor that the S&P 500 works best for you. Then every month you invest whatever your your frequency that you have decided that is going to be in that amount. You invest that, and you can know that at the end of that period of time, your money is stable. It's in a safe place, and it's going to grow, and it will work for you. And 20 years from now, 15 years from now, 30 years from now, you will have a large sum of capital waiting for you. Your investment, it will grow. Is it worth investing in Bitcoin? If you believe blockchain technology is the future, then there is reason to consider it. If you think Bitcoin will have future advancement and potential mainstream adoption. Now, the blockchain technology is advancing in many areas. One of the more popular areas where it is gaining traction is in the political arena for voting. And you can do some more research, some independent research on this yourself, that the blockchain technology, there are companies that are proposing using the blockchain technology for to replace in-person voting. And this will allow a voter, a registered voter, to vote online in a secure manner without having to worry about a miscount or their vote being stolen or manipulated by a third party. So there's a lot of potential in that. Now, do we know if Bitcoin itself is going to be the predominant winner? Well, that's left to be determined at this point in time. But again, if you believe that the blockchain technology is the future, then yes, that's something. It is something for you to consider to invest in. If you think that Bitcoin will have future advancements, which it is starting to appear as though anyway that it is beginning to gain some traction. It's very slow. However, it is gaining some traction. So if you believe in these 2 points here that I have offered, then Bitcoin is worth investing in, or is worth you considering investing in it. Now let's look at the dangers of Bitcoin. It could disappear. It is easy to replace with an alternative. There are many alternative cryptocurrencies that have proven to be actually more efficient in many ways than Bitcoin currently is. So it makes it very possible that it could easily be replaced or replaced by another alternative coin. It's extremely vulnerable to cyber attacks. As we mentioned previously, your digital wallet can be hacked and stolen with no path of recourse. Pricing is significantly more volatile than stocks. as we mentioned previously in this presentation, you see the wide range that Bitcoin prices sell for. So that can be extremely dangerous, because let's say you know at the point that you're getting into the market for Bitcoin, it's at $20,000, and then 2 days later it could drop down to $3,000 or $2,000. So that's something that is a danger, a high risk to Bitcoin investing. Bitcoin is not subject to the same Securities and Exchange Commission's criteria that regulates the securities markets. Once again, you have no path of recourse. I mean, that's the best that I can. I mean, I think that's all that needs to be said. So because it's not given the same level of scrutiny, it's open. It makes it more susceptible to cyber attacks. And for the most part, it's kind of like a wild, wild west, in my judgment. To a certain extent, anyway. Key takeaways. Bitcoin is more volatile than stocks. Bitcoin has the potential for significant rapid growth, but also significant rapid loss of capital investment. Again, if you get into Bitcoin and you have a strong strategy and you are savvy in it, then you can make your investment at the right time, and within a matter of a few hours in some cases, or a few days, then you could significantly increase your capital investment. At the same time, you could also lose it just as fast. Due to its high volatility, it makes sense to limit the amount of Bitcoin investment in your portfolio. Here are a list of sources that you can pause the video, check the sources so that you can get more information about what was discussed in this presentation today. And I will even list these sources in the description box below. If you found value in this presentation, subscribe, like, and share our channel. Thank you for your time. We are complete.